Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Thursday, July 15th. This will be a technical analysis breakdown. So if you're somebody that uses technical charts within your decision-making process as a trader, or who knows, maybe you're just interested in learning more about the tool of charts and how they can be used, how they should be used to help formulate good, solid, wise decisions as a trader, then this will be a video for you. Real quick, before I get started though, if you are interested, if you are liking what you hear as I go through the video and you're starting to see, okay, I can see the value here and I do want to learn more about how to use this tool as a trader, then I am offering a free live class tomorrow on Thursday, July 15th at 7 p.m. Eastern time. So I want to personally invite you to get signed up if you do want to learn more. So like I said, just keep that in the back of your mind as I go through the video here. If you're enjoying, if you want to learn more, or maybe just get better with technical analysis as a tool, then like I said, I want to invite you to sign up for the class. First one here, ticker symbol AMC, and yeah, not a good day at all. Just as a quick plug, I did do another video this morning on AMC, specifically all about the $35 mark and why in my mind it's a very important level. So I'm gonna gonna quickly fly through it right now. But like I said, if you do want more details on 35, especially in what could very well be happening right now, like I said, just go look on my channel and you'll see that's the most recent video other than this one. But as far as updates are concerned, for the list, well, going to go ahead and get rid of these lines here. They've served their purpose already. And from a presentation standpoint, I just don't want to create confusion because there's line and clutter everywhere. But the first update comes about based on a foundational rule in charting, which states when key levels are broken of support, they tend to act as resistance. And $35 was that main, very important level going into today. And you can see that the price has now broken down below it and has separated quite a bit below there. So if there is any sort of attempted, consolidation and then bounce over the next few days, that's where the big question mark resides. Not in the sense of can it get back up to 35, but more importantly, can the price actually break above it and stay above it? So keep a very close eye on 35 moving forward as that main area of resistance. As far as next potential areas of support, got to squeeze things down here quite a bit. But next overall level that stands out to me and looking like it could very well come into play is this general gap close location right around, let's just call it $32, give or take a little bit. But 32 would officially basically be that gap close. And then you have the very valid, very wise question of, okay, the gap is closed. What is it going to do? Is it going to, start to reverse around because the gap has been closed? Or is this downwards pressure just going to continue? So we'll see what happens with it on Thursday. Next one here, ticker symbol XELA, and this one's a little tricky to talk about because there's perspective that goes into it. I'm actually just going to get rid of that line for now. But what do I mean by perspective? Well, if you are a day trader, flipper, scalper, whatever you want to call yourself, and you were buying right there because you were trying to anticipate the breakout because it never did break. So maybe you're just trying to maybe cut in line thinking that it was going to break out and you bought right there and you're a day trader. Well, then, yeah, from that point of view, the chart looks really bad because, yeah, the price did ultimately pull back quite a bit. So from that angle of things, not looking so good. But let's take a step back and let's look at things from the big picture point of view. And from that angle, everything is still perfectly fine. There's a couple of ways you can look at that if you want. First way is just let's draw ourselves a trend line like that. And I'll change that to green to represent, a bullish attribute, that being in an overall uptrend right there. If you don't want to use the trend line, that's fine. You also have that purple line there, which on my chart denotes the very well-known, the very famous 50 period moving average. You can see the price is still up above there. So from any of those longer-term indicators, like I said, whether you're using a trend line or that moving average, the price is still above those areas. And while this doesn't guarantee anything, XELA does have a history of big pullbacks, life. Big pullbacks, life. Big pullbacks, life, and once again, a bigger pullback. So moving forward, while it doesn't guarantee anything, it does at least make it plausible to think that, yeah, you know what? Maybe life shows back up. If it does show up, then you have these two areas of resistance that still remain very important. That initial level there at 475, and the next level there up there around 540. So like I said, overall, the chart's fine. But yeah, if you're some sort of day trader that bought up there, then yeah, right now the chart's not looking so good. Next one here, ticker symbol SGOC. And really the only reason why I'm doing this one is this track record of being able to move and move very big. So, I mean, as I'm sure you're aware, this thing several days ago made a great move. And then today, volume came back in and started to show some signs of life. Now, could this very well just be kind of one of these almost kind of aftershocks where you have a one-day wonder and then it rolls back over? Yeah, that could absolutely be the case. But to be fair, I don't know, maybe this is the start. Maybe this is some sort of leading indicator of another round of big moves to happen. And in that regard, to me, the main level that stands out here from the resistance standpoint going to be right there around $17.50. Now, if the price gets up to $17.50 and breaks it, that doesn't mean that for sure guaranteed it's going to, go back up to the $28 mark, but that would put it in a territory where, yeah, the chart kind of does open up again until you have these areas up around that $28 mark. So like I said, if you are interested in, okay, yeah, I get it. It's coming back to life, but I'd like a little bit more confirmation that it's, fully come back to life. Then 1750 could make, sense from that angle. But like I said, to be fair, maybe this is just some sort of little knee-jerk reaction, not much power behind it. So in my mind, this trend line here can become very helpful. So again, I'll change that to green to represent more of a bullish attribute, meaning, if the price comes down here and gets to that level and then just crashes down through it, well, then at that point, yeah, this was just kind of a miniature dead cat bounce and the downtrend continues. But as long as the price stays above that green line, then you got to give credit where credit's due and say, yeah, the price is still technically uptrending, and whether or not it's going to uptrend to the point of building enough momentum to break that 1750 mark all remains to be seen. But definitely a little interesting pattern here moving into Thursday. Next one here, ticker symbol SPCE, and really just doing this one, not necessarily because there's like a great looking setup, but just because I know there's a lot of people following this one. It's very popular, so I want to try to keep people somewhat updated on it. But yeah, the big leading indicator was that 30-minute session from right there a couple days ago. And after that, it's just been a slow and steady bleed since then, including today. So I'm going to go ahead and, like I said, just get a couple updates made to keep people informed that are still interested. And the first update is just, again, based off of that same rule that I talked about on AMC, that when levels of support are broken and closed below, they tend to act as resistance. So newest area of resistance on this one, right up there around 35.85. So if the price does try to bottom out and then, bounce back upwards like AMC, not really a question of can the price get back up to that level, but more importantly, can the price actually break above it and stay above it? So keep an eye on that in terms of the near-term area of resistance. As far as next potential areas of support, as you're seeing here, having to squeeze down the chart here quite a bit now because it's been a good amount of time since the price was last down around this area. But yeah, next key overarching level now going to be down there right around that $31 mark. So we'll see what happens with it. But yeah, as of now, it's very clear that the bears have shown up in a very big way. And it's just a question of, okay, well, where are the bulls finally going to show up to stop the bleeding? And that still remains to be seen, but maybe down there at 31. Next one here, ticker symbol DIDI. And let's give some credit where credit's due. After just getting absolutely destroyed to the downside, it did do a good job of basing out and has now been, working its way back upwards. And in doing so, it's given us a nice little trend line, give or take right around there. Price has pulled back, so that'll be the first indicator again. Whether or not you want to use this trend line, that's not really the point. The point is just illustrating the fact that the price has been trending upwards. The much more, probably accurate level and more followed level is going to be that purple line right there, just again, the 50-period moving average, and that's one of those moving averages that a whole lot of people watch. So point here being that, yes, I get it. The price is pulling back right now, but from the big picture point of view, as long as the price continues to stay above that purple line there, then that does imply that this overall bounce is still fully healthy, because in order to remain above that purple line, the price is going to be required to need to continue to put in those higher bases, and that's what you want to see. A truly, strong bounce, a truly healthy move is going to build higher bases over time. As far as levels of resistance are concerned, let's make sure I'm not missing anything. Yeah, so the first key level just going to be where the party stopped today, right there at 1340. But then after 1340, next key level up there right around $14. And let me just double check. Yeah, right around $14 and about 10 cents, give or take, right around that area. But yeah, the bounce is on. The bounce is continuing. A little bit of a pullback here, which could be a very nice entry point there, depending on how this pullback continues. But overall, definitely an interesting setup here. Next one here, ticker symbol LCLP. We're down in the world of penny stocks, and an absolutely monster move today, especially from a percentage standpoint. But this was all occurring on very respectable volume. So nice move up, although you got to be careful with these. And I mean, I fully respect if you want to disagree with this, but yeah, that level's a area of resistance. Yeah, you could technically try to buy the breakout, but that could also, I think, be argued, at least in my mind, as chasing the price. And, chasing the price can get a little iffy, but if this thing wants to pull back, then that makes a much more different situation where it doesn't guarantee anything, but from a risk-reward scenario, it can, leverage things a bit more in your favor. And as far as pullback points are concerned, what I'm very interested in is, can the price pull back to 0.025? And if it does, then if it holds, then that would produce a very interesting pattern. I mean, if the price were to come down here and then just bounce around that area, and I'm just generally speaking here, but you'd have the pull portion right there, you'd have a general downtrend, you'd have, or, from the top, you'd have this little downtrend here from the bottom, and you'd have what would be known as a bull flag pattern. Now, that doesn't mean that a bull flag is for sure going to be guaranteed to go back upwards, but the point here being it would be an attractive pattern, and from a risk-reward standpoint, could very well turn out to be a good, solid trade, good, solid setup. But like I said, and who knows, maybe I'm totally wrong. Maybe the play, maybe the trade is having it go back up to those highs and buying that breakout right there. But for me, that seems a little too risky given how much it is up today. But yeah, if it wants to pull back a little bit, form a nice little bullish pattern, then that's a much different scenario. Next one here, ticker symbol VERB. And like, what was that? XELA. Depends on your strategy is going to dictate how you feel about this one, meaning anybody that was buying up there as day traders or scalpers that wanted to buy and sell within 10 minutes, well, yeah, from that angle, things are not looking so good because the price did pull back. But when you take a step back and look at things from a much bigger point of view, what you have here is a good scenario where you have a very big uptrend. And you can see right there, price pulled back, came back to life. Pulled back, came back to life, pulled back, came back to life, and then once again pulling back. So like I said, just as XELA, the question mark being for it is, okay, it's pulled back. Is it going to come back to life? The good news is, as far as, chasing, don't have to worry about that. The price is pulled back, and, it's just a question of if you think this thing can go through a healthy consolidation and head back up, well, then from the risk-reward standpoint, a good situation here, especially since there's already a track record of it pulling back and then returning back upwards. Again, doesn't guarantee anything, but it's not like it's some sort of random thought on your part to say, hey, I think it's going to go back up. In this situation, if somebody says, okay, you think it's going to go back up based on what? And you can say, well, based on the fact that it's happened several times before. So keep an eye on this, but the point here being is nice overall trends still exist, and it's just a question of, all right, if this trend's going to continue, well, good thing the price is already pulled back, so there's no worries of chasing, and it's just a question of can this thing get itself turned back around? We'll see. Next one here, ticker symbol DTSS, and there's no need to even try to be polite about it. This is a very ugly looking chart. However, sometimes ugly charts can produce some nice little trade setups here. But in my mind, I'm not interested at this unless this gap closes down there at the $3 mark. But as of now, it's very clear that there is a whole lot of downwards pressure to it. I mean, can you imagine? There are poor souls buying up around that area. Yeah, they're not having a very good day. Anyways, though, very clear. A lot of downwards pressure is showing up. So in my mind, the trade becomes, okay, well, can there be a little bit more panic? Can it close that gap? And at the gap close, again, by no means, and I wish I could say trading was this easy, just because the price closes the gap does not mean that all of a sudden it's going to reverse back around. Now, would it be shocking to see some sort of bounce off the gap close? No, I don't think that would shock anybody. But to sit here and say that's going to be guaranteed to happen, that's just not how the market works. But like I said, in my mind, I think the play is let some more panic show up. See if if it can close the gap, and then you have a nice, very, a good solid risk reward situation. Because maybe the price keeps on crashing. Hey, and that's why risk management. That's why stop losses exist. But if it does decide to, get some sort of decent sized bounce, you could have a whole lot of reward compared to what was being risked there. So $3 an interesting level, and really to me that's the main dynamic. And if $3 doesn't come into play, and if this thing wants to just all of a sudden snap right back up, well then in my mind, the way I view the chart, that would just be there's no trade at all. But maybe you feel different, and that's fine too. But like I said, it's a very ugly looking chart. So let's just see if it can get a bit more uglier and close that gap. Next one here, ticker symbol USEG, and basically the same premise that we just looked at. Very, very ugly looking chart. And quite frankly, a high possibility that this was just one big old pump and dump. However, there's a chance that, okay, maybe this is just overblown. Maybe there's not any sort of true selling pressure behind here, especially when you consider the volume. Not much volume at all has pushed that down. So again, just like DTSS, the main level here is all about these moving averages right at $4.45. And just from an overall story perspective, think about what 445 is representing. If the price were to come down to 445 and then just continue on down, that would quite literally be putting the price right back to where it was. So quite literally, or said another way, that would imply that the price exploded and then went right back to where it was. So not a very good situation. But again, from a risk standpoint, very minimal risk, assuming you let the price come down to these moving averages and this breakout point. But if the price comes down there and decides to bounce back up, well, you're looking at quite a bit of upside reward. And by no means does the price even have to go back up there and retest those highs. I mean, even if it got halfway, I mean, that would still be a very potential nice trade. But yeah, no doubt about it. As of now, the chart is very, very ugly. Can it get a little bit more ugly to get to 445? Maybe. And then at that point, it's a matter of, do you want to bounce? And if so, then you could be looking at a nice little win. Next one here, ticker symbol VRPX. And overall, what I like about this one mainly is how it closed out the day. Latter part of the day, the volume came pouring in. Price behaved very nicely with it. And now it's sitting around some very key technical areas. And I could see maybe some people just really disagreeing with this. And I'm not going to disagree. But kind of a bizarre cup and handle a little bit. You have this move right here as the cup. You have this coming back down. And now you have this part trying back to get up here. And like I said, I totally understand if you disagree. But the point here being is, from an overall psychology standpoint, this thing got destroyed, is now showing some strength, attempted to get destroyed again. But this is what makes it interesting, because on this attempt for the price to get destroyed, nope, no destroying, as the price has now recovered back up. So going forward, it's just a big question of, okay, it did a great job of fighting off that attempted, to destroy it right there. But now can the price actually push up some more and get a break of that trend line area, which is right around, give or take, $7.75. And while nothing is guaranteed, if the price can get a good high volume break, that's the key part, a high volume break of $7.75, then you got to think it's at least rational and possible for the price to at least get up to $8.50, if not even higher than that. But again, by no means is that guaranteed, but it's at least a valid, rational thought process given, the pattern that's formed right here. But yeah, overall, very, very interesting, and we'll see if the price can indeed get the break of that trend line. So that wraps up the top 10 here, and I just want to end once again by personally inviting you to this live class that I'm offering on Thursday. So if you did enjoy what you heard, if you're starting to see, okay, yeah, I can see how these charts can be used to make good, well-informed decisions as a trader and build consistency, then I'm very confident you'll get a lot out of this class here, especially from how charts should be used, how they should not be used, the philosophy behind them, and really start to give you some good confidence as far as the tool of technical analysis. And then as far as this video is concerned, if you enjoy these top 10 videos, if you want me to keep making them, then I'm always looking for feedback. I want to make sure that I'm not squandering my time. So if this is worth my time and you enjoy it, do two things: hit that like button, leave a comment down below, even if it's just a smiley face emoji. But those two things go a long way in communicating to me that these top 10 videos are worth my time. And as long as I know that they are, then I will continue to do them. And I really appreciate those two little things. And again, like I said, if you're interested, if you want to talk charts, if you want to learn more about them, then hopefully you'll get signed up, and I'll see you live on Thursday at the class.